Hello, hello. We are live. It tells me, how are you doing? If you can hear and see us okay, drop us a note in the comment. Let me know which platform you are watching this on. I would love to hear. Say hello, give us some love before we get going. Let me know that you're here. Let me know what platform you're on. Say hi in the comments and we'll get cracking shortly. So let me know, are you listening to this on LinkedIn? Are you on Facebook? Are you on YouTube? Fire away in the comments and we will get cracking shortly. It's telling me there's an error on the Facebook stream. So you probably are not watching on Facebook, but you can get onto the stream on YouTube or LinkedIn if that is being problematic for you. And we'll get cracking very shortly. Very excited for today's session with someone who has got an immense amount of growth in such a short space of time. So we'll hear all about Julie's story in a second once I get some confirmation that you are out there and you are listening. Don't be shy. Put it in the comments that you are here. Let me know whereabouts you are based in the world. And as always, remember that these sessions are recorded and they are then uploaded to my podcast afterwards. So if you want to catch up on previous episodes that I've done with other accountants, head on over to the Profitable Accountants podcast, wherever you listen to your podcasts, and follow the podcast, download previous episodes. There's probably about 30 or so interviews now that I've done over the last few years with other accountants doing great things. So these are a great way for you to get inspiration, motivation as to what is possible, what you can achieve in your firm by learning from the experiences of others, learning from the journey of others. Thank you, JMJ Hartford, that you're on YouTube and based in Hartford in the UK. Fantastic. Thank you very much, JMJ, for putting a comment in. Anybody else? Let me just pop a message in to my assistant to say, check out Facebook stream, as it doesn't seem to be working. Bit of a live technical updates going on there. Okay, well, let's get started. Hey there, Holden Associates. Good to see you here on YouTube. Hey there, Danny. Good to see you from Tamworth as well. Okay, well, let's get started. So today, my guest is Julie Wilkinson of Wilkinson Accounting Solutions. Hey there, Julie. How are you today?
Yeah, I'm good. Thank you. Thanks for having me on.
You're very welcome. Very welcome. Excited to get into your story and find out what you've been doing, the amazing growth that you have got, so that other people can get some kind of tangible takeaways from your journey, get some motivation, inspiration as to what is possible. So kick us off, Julie, with a bit of background on you. How did you get started with your own accounting firm? Far away.
Yes, so I am a chartered management accountant by trade. I came from corporate, so I've been working in finance for over 20 years. I started life as sort of a purchase ledger clerk and worked my way up. So I didn't go to university. I studied through my jobs, and I suppose it's a little bit unusual maybe for someone to start a practice that hasn't worked in a practice, because I didn't have a practice background. But the reason I started it was because my last job, I worked for a 250 million group retail company, and they had done some acquisitions. And one of my roles in that company was to help integrate sort of 3 entities into the group. So I did that project, but one of those entities was, I suppose, what you'd call an SME business. It was a family run business. And when I went into that business, it was, well, let's just say quite poorly ran. And over the course of the time of doing that entity, I started to think to myself, well, if this business is struggling and they're backed by this big equity firm, then what does the average business do? So I asked 20 businesses what their accountants did, and 100% only saw their accounts once a year. Mm-hmm. And this was businesses I did a variety. I mean, I'd never really worked for smaller businesses. I'd only ever worked for large businesses. And I'm not always saying corporate businesses are run well, but what they do have is structure. So they do have a reporting cycle, they do have a structure. So I was quite surprised to see these firms, because I asked firms between sort of 50,000 and about 20 million. So I was really surprised to see such big firms. So I then went out to accountants and I asked a few, what they offered. And I was told nobody values management accounts. You can't sell it. A lot of firms have tried to sell management accounts, but they couldn't. And what became quite clear to me was the background of a lot of people running practices. I seemed to have an experience, some form of skill set that a lot of people didn't have, because you can't really teach experience. You can't teach 20 years in working in big corporate commercial firms. So I realized I had a bit of a skill set, maybe, that other people, I didn't know how to sell it at first, but that's what I knew. So anyway, so that was the start of Wilkinson's. That's why I started it, was because I saw I had a bit of a skill set, a bit of a gap in the market of people not really getting management accounts.
Okay.
So yeah.
All right. So let me stop you right there, because management accounts in themselves don't sell. It's what the management accounts can do for you, can do for a business owner, that helps them to make better business decisions, right? So how did you go about getting your first few clients? Because presumably your taxi drivers and your small sole traders aren't going to value management accounts anyway. So how did you go about finding those initial clients that will benefit from the years of experience that you had in corporate and industry to add value to their lives?
Well, the truth is a little while, to be honest. So one thing I always did was I was always quite strict with myself. So I always knew I didn't want to be a practice that just had hundreds of accounts myself processing and getting. So although I did take on some sort of smaller bookkeeping, one thing I always did was outsource things right from the start. So I always had outsource, even though arguably I could have done it myself, I didn't want to. So I was always quite strict with what I took on in terms of sort of smaller clients, to give myself the autonomy and the ability to be able to find bigger clients. And I suppose what I did, my starting point was, when I first left my job, I contracted as an FD initially. That was in 2019, because I was originally going to do all this in 19, but as it happened, I ended up working for the whole year. When it got to Jan 20, or just before Jan 20, I thought to myself, I've got to stop this, because I'm not really achieving anything. I've got to start doing it. So obviously I left and started this all in Jan 20, just before COVID. Anyway, when COVID happened, I thought, well, I've done it now. I've just got to get on with it. So I found what I did. The first thing I did was I still took on some what I would probably call contracting clients, but I changed the way I did it. So the first change I did was, rather than swapping myself for day rates, I did more project based. So I sort of charged a fee where I probably made a bit more per day than average I was charging by the day rate as a consultancy, because that allowed me still to test the waters of what I needed in terms of the clients, but then still get the big clients. So I only worked with a couple. And then obviously now we specialize in M&A, and how I got into M&A was I did some CFO work, and there was a broker, and the long and short of it was I consulted for a couple of broker firms to help them, because they were really impressed with the information I'd be able to get. And then eventually I decided to launch M&A myself. So what I did was I slowly took on small amounts of clients to see who I wanted to work with. And trust me, I had some quite bad clients as well as good clients. But then over time, built my own organic strategy, because when I first started, I didn't have any social media presence. I spent about 15,000 in the first year on sort of professional development, sales coaching, my own journey to build myself up to know who I wanted to work with. So yeah, that's probably the background of how it started, really.
Yeah. Okay. Fantastic. So Jan 2020, you're still kind of contracting, but you're starting to bring in those smaller clients now, and presumably you're doing everything for them. But to make sure that you weren't inundated and working crazy hours doing small tax returns and accounts, you outsourced that. So how did you outsource that? Did you outsource that locally in the UK, or offshore outsourcing? Which avenue did you use to outsource that work?
Yeah, back then it was just in the UK, so freelance bookkeepers or accountants. Right. And then it was probably in when did I get, to be honest, around mid-21, I actually hired my first staff member anyway. I actually hired someone internally in the end, because we ended up having a couple of bigger contracts and I needed someone internally. We still use freelance bookkeepers today, and we do actually have partnerships offshore now, because obviously we have a lot more staff and a lot more clients. But back then it was UK freelancers and then one staff member at that point.
Okay. Fantastic. So yeah, just kind of stepping back to, your contracting. So that's how you were getting the bigger FD type jobs. So did you kind of find those through agencies? Presumably used an agency initially to get those contract roles. So did you find then your FD type clients through the same route, or did you use different means to find them directly, cutting out the middleman? How did you go about finding those meaty clients that did value your role as a kind of a virtual FD or CFO?
No, I never used an agency actually. So my first FD role was just through people I knew because of the jobs I'd done. I knew a lot of like quite strategic directors and things sort of locally in London. So some of them just approached me.
Mm-hmm.
Once I then started to find the sort of more consultancy FD clients, I suppose a little bit of luck and a little bit of pushing myself to go to. I got a couple from networking, some through the website, some through some referrals to people I knew. But at first, I only worked for sort of one at once or maximum of two because it was just me. The idea was to build a portfolio of CFOs. So now we actually have 7 CFOs that work with us. I've got one employed CFO and the rest are freelancers. And that's sort of what I realized was the clientele. So that's one of the reasons we moved into M&A, because now we specialize in acquisition. So although we do act as CFOs, we do specialize within the acquisition and exit planning rather than sort of more just ad hoc CFOs. You know, we don't tend to just put someone in for 3 days on an ongoing basis, like maybe like someone like the FD Centre does. We tend to work on projects for people and do a lot of consultancy and then get a longer term retainer off the back of it when they're looking on their growth strategies.
Okay, so talk to me about exactly what does that look like? You say you specialize in mergers and acquisitions on a project basis. So, you know, practically and tangibly, what does that look like in terms of how does that manifest itself in the terms of the work that you do? Is it a case of, right, okay, well, there is a company that is wanting to exit in a year, 2 years time, and you work closely with them to get them exit ready? Is it that type of arrangement or is it something else?
Well, a bit of both. So basically we work as acquisition CFOs for buyers. So people who are buying businesses, that's one of our client route to market. They might have an exit strategy in the end. So they're doing a buy and build, but and then exit. But we go in with the buyer. So they'll have a deal that they want to buy and we'll go in and help them with the due diligence, the valuations, and basically become their acquisition CFO. We then stay on. We then have post-acquisition services that we do. So once they've closed the deal, we then help them implement a financial strategy. So we build the financial infrastructure that they need. And most of those businesses are doing more than one deal. So what we eventually do is we become in partnership with them and work on multiple deals. So likely we'll say, right, we'll have a 3 to 5 year partnership where we help them on deals. And as they get to a certain number of deals, we'll help them put the governance and controls in, and they'll start maybe recruiting some form of finance team in-house as we go along that journey. So that's what we kind of look for. I mean, we do work with some people that are just doing sort of one-off deals, but a lot of people we work with are doing more than one deal. So therefore, that's how we build a longer-term partnership with them.
Okay, fantastic. No, it's excellent that you've managed to get kind of position yourself in this market, which obviously values your experience having worked in an industry and corporate and the experience that you can bring. So tell me more about so was it just, you mentioned a bit of luck and kind of who you know, getting a strategic partner? Did it kind of spawn off you meeting strategic partners that then introduced you to these type of companies, or what else have you done in terms of your marketing to get in front of your ideal client, being those, kind of an acquisition for buyers? How did you get into that market?
Well, now I do loads, but when I decided to go, so basically what happened was when I was doing the contracting for acquisitions, I realized actually I can do this. So I just decided to go and do it. So I think, although I say it's a little bit of luck, I think my mindset, and I just pushed to go and do it. I wasn't scared. I just started to build the packages and I started doing it myself. And I basically recruited quite a lot of people on the basis that I felt like I was going to get the right work. So obviously I took a bit of risk. And that was when I recruited my group CFOs internal. And first of all, I just went to a few networkings and just met some people. And I don't know, maybe I've just got a good instinct to people. Like I'm good. I don't go to a lot of networkings. It's not like I go to networkings every day. I kind of picked strategically where I thought I would just meet the people. And as it happened, I did. I then got introduced. We did good jobs and I was just getting constantly introduced to more people. Now, what was happening, everyone was saying, oh, we've never seen someone like you guys before, because I think we're quite unique in terms of you get sort of corporate finance and you get accountants. And what we get told is corporate finance don't really tend to do any accountancy. So no post, but accountants don't always have the skill set for the corporate finance. I suppose we do both. So that's where our sort of skill set comes in and our USP. And that's why we've been so popular. And brokers were approaching us and going, oh my God, we haven't seen anyone like you before. Can we introduce? So now we get so many referrals through past clients and brokers because they've been impressed with what we've done. And obviously that's expanded my network. And then I was really clear. So it did take me 18 months probably on LinkedIn because I decided to change my whole marketing strategy and then I just stuck to it. And now I probably get about 10 messages a week on LinkedIn from people saying, oh, will you help me with my acquisition? And then over that period, our SEO is all focused on it. So I launched an SEO last year on TikTok. And then this year I've launched a podcast. I've got my own podcast, The Build and Exit. We actually just reached 1,000 downloads. I already had it 13 weeks. We've just reached 1,000 downloads today. So now I do a lot more socials, but obviously when I started, I was only really on LinkedIn, and I've invested the money and the time and the people to launch in different socials.
Amazing. That's fantastic. Well done, you. What are your average fees, would you say, for clients that you help on a retainer basis?
Well, on acquisitions, nothing less than 10 grand. So anywhere between 10 and 25 grand a deal, depending on the size. We'd work anywhere between sort of a 1 million turnover to up to about a 20 million. Mm-hmm. I mean, because of our background, we have been asked to work on bigger deals because all of our CFOs are all corporate. So like my group CFO worked in a big corporate and all of our CFOs have worked on deals. So some were part of the Argos Sainsbury's merger and things like that. Right. So because of our background, we have been asked to do sort of 200 million groups deals, but for us, we have to be careful because it's what's the risk worth because of the insurance. So, we do, and we work international. I think we're working with about 11 countries now because we got a lot of people coming into the UK. We're usually, I would say, working on somewhere between sort of 3 to 5 client deals every month. So that will either be any part of the acquisition, either someone that is an organic that's looking to exit, or it could be we do go in, even if we haven't been involved on a deal, sometimes people have messy accounts afterwards. So for instance, we've just come off a project that was 6 months where we put 5 people in to tidy up a company because it got into a bit of a mess.
Okay. So that's 10 to 25K for the project.
That will just be that's just the acquisitions. The other stuff is just, I don't know, it's quite bespoke because we do a lot of different things. So it'll either be a set project price or, but they're sort of our due diligence fees.
Yeah. And so when you are asked or when you kind of get in and provide that CFO or virtual FD type service to clients, what are your typical kind of monthly fees on that to retainer fees?
Well, it can be anything from about, because we do have a tax and bookkeeping team. So sometimes if we're going with quite ambitious growth people, it might start off where we're just doing sort of the bookkeeping and then transition into something more. I mean, I don't know. I'd say it can be anything from, it'd be a minimum £1,000 a month, but it could be anywhere, I suppose, up to somewhere between 10 and 15,000 a month. Mm-hmm. Depending on how much we were doing, the size of the company, the number of people that were working on the account.
Yeah, fantastic. Great. So you still have kind of a mixed bag of clients, and you have some clients where you would do the usual accounts, tax, bookkeeping, VAT stuff, as well as the more kind of lucrative and sexy kind of acquisition type stuff.
Yeah, well, so we've just done an acquisition ourselves. We've just bought 100 clients off a retiring firm. Well, I say we did it this year in 23 earlier in the year. My strategy is we buy retainer clients, we organically grow consultancy. And the reason we obviously want the retainers is because they're more guaranteed and it's a bit more secure because there is always risk in the consultancy, especially in the growth phase we're in, because obviously, it is hit and miss with the cash flow and deals closing, getting the clients on board. But now we've got 9 employed staff, and then we've got, like I say, 7 freelance CFOs, and we also do have the offshore partner that we work with now we have a set amount with, and we do have some freelance bookkeepers here as well locally.
Okay. All right. Let's move on to talk about your team structure. You've only been going 3 years or so, just over 3 years, and you're up to 18 odd people already. So how did you go about? What was your recruitment strategy? Where did you find your people, and what structure did you come up with based on what you had going? So talk us through a little bit about your people, your team.
Yeah, well, it's gone quite quick, really, because I suppose the team really has only been built significantly in the last sort of 15 months. So probably, like I say, around sort of early 22, I only had one staff. Now we've got 9 employed, and then the freelancers have grown along the way. So the structure was, the long and short of it was I took the plunge. So I had like an employed sort of finance assistant. And because of all the M&A work, I just took the plunge and hired my own internal group CFO. So that was the first plunge I took, because I was like, because at the end of the day, my aim is not to work in the business. I don't really work in it that much. It's been quite a bit because of the acquisition. So I needed that role because he's our group CFO. So he then oversees all the consultancy, and the other CFO. So that allowed me to step away. So I don't really do anything on the consultancy side. I suppose that was a bit of a risk because I was really early in the acquisition journey. I didn't know, but I had my forecasts and my gut instinct, and as it happens, it's panned out really well. So that's been good. And then he then obviously has a lot of decision making within the business. So he's gone out and recruited some people himself. So when we built the team up, because off the back of the acquisitions, we then got a lot of bookkeeping and tax work, and then we were doing our own acquisition. The reason I left it a little while before I did my own acquisition is because I couldn't do it until I had the group CFO. So the group CFO came on board around June last year, and that was when we found the first acquisition. And then obviously we had to go through the funding. It's always hardest to do the first one. So then we found the first one around June. And to be honest, we could have closed it at the end of last year. But because of where they were, and I went on holiday for a month in January, they asked to close it this year after all the tax season finished. So that's why we left it and did it this year.
Fantastic. Excellent. All right. So talking about the acquisition then, how did you go about finding that? Did you kind of go out looking for it, prospecting, or did it come on your desk through a broker?
Yeah, it came through a broker, because obviously I'm connected to a lot of brokers and I suppose intermediaries that help connect buyer and seller. So it came through a broker. I mean, this one's been a really good acquisition to trial, because essentially it was a retiring company. And we wanted to trial what happened if we took what you'd call old-fashioned accounts and modernise them into 21st century. And as it happens, we've done really well. I mean, we've had 100% success rate of converting people to QuickBooks. So this was to the point of really old-fashioned. So, well, I call it old-fashioned might be a bit harsh, but what I mean by old-fashioned is it was still paper-based. So they were still using the Excel spreadsheets, manual T accounts. The receipts were being... they were actually driving and picking up the receipts, sitting down with them, having coffee, going through the accounts. And obviously that's not real life, is it anymore, with where we are on the 21st. So that it's been a challenge, because it's, it has been a lot of like, they had a really good relationship with the client. So first of all, it was how do we transfer that relationship, but also how do we not have to go and drive and pick up receipts. But as it happens, like I say, we've had a really good success rate of explaining to people the importance of the systems, and sort of, I think, delivering probably, a more advanced service by, it's not just now re-logging the bank statements every year, it's actually how they can utilize the information. So some of them are bigger and might warrant some exit planning and management accounts. Some of them are smaller and don't. But either way, everyone still wants to see their accounts more often, small or big. And you can do smaller forms of management accounts for smaller companies. It doesn't have to be a complicated ball pack. It's just, how do you see your information and understand where your business is? And my experience is all size businesses want that, regardless of like their size. It's just they're just less complex.
Absolutely. Fantastic. So what are some of the things you'd say to others with regards to your experience of buying a practice? What should they watch out for? What are some of the frustrations or challenges or obstacles you've had in the process that you managed to then overcome, to give some pointers to others listening and thinking about growth through acquisition?
Yeah, well, obviously, because we do it for a lot. I mean, we've actually done DD for people buying accounting firms as well, funnily enough. And obviously, we do a lot. So, I mean, there's quite a few things to consider. It's why you're buying it, first of all. I suppose that's probably one of the most important things, like why you do it. I mean, me personally, after doing acquisitions, I would never grow something organically again. That's just what I've learned. I didn't think about acquisitions when I started until I got into it. And then what type do you want to buy? How many staff does it have? What size? Basically, I think it's harder to buy smaller firms than it is bigger firms. We did a smaller firm because it was a trial for us, because of how much work it's been to transfer them. We wanted to test it, but I think it is harder to buy the smaller firms. How owner operated is it? Who manages the clients? Who are the staff? Are they good? Are you trying? I mean, we did an asset sale, not a share sale. So we just bought the assets. We didn't buy the shares, which is actually typically a harder acquisition, because when you buy the shares, you keep the name. When you don't, and you buy the assets, they transfers into your company. So not only did we have to transfer the clients from the clients, it was a big change, because they actually knew, oh my God, it's not Arch anymore, it's Wilkinson's, our acquisition. So that was harder, but buying the shares can be easier because you can keep the name, and actually the customers might not know too much because the same people are managing it.
Yeah. And what's in your view, what kind of size was it? So when you say small versus big, in your mind, what's the differentiation? What's a small firm? What's a big firm?
Small is under 500,000. So ours was about 300k of sales. So I would say small's under 500,000, big's anything over 500,000. Although I would say typically businesses operating under $1 million in general are a lot more owner operated, meaning the owner works in it. They're always harder.
Yeah.
Because normally the owner is the person in the end servicing the clients by some form. They might have a team that produces it, but it's why is the clients with them? Is it their brand? Like, is it actually a company, or is it just because they like the owners? I mean, our one was quite owner operated. It was because they liked the owners. We've been quite successful in transferring that relationship across. But it's hard work. Whereas obviously if you buy one more established, where I suppose you've got client teams actually working on the clients and the owners have no involvement, it's a lot easier as the buyer because it's already ran itself. But what I find quite interesting is I've never actually met an accounting firm that has management accounts for their own practice. So I've never once seen an accounting firm management accounts, which is interesting, isn't it? Because a lot of accounting firms say they're delivering financial information for clients, but if you're not even doing it yourself, how can you deliver that for clients?
Absolutely, not practicing what you're preaching.
And I haven't ever seen one that can give a management accounts.
Shocking, isn't it? So how did you manage that transition? So that, because if it was fairly owner operated, how did you transition those relationships? Because presumably you didn't want to get stuck in. You didn't want to go and see however many hundreds of clients that you were buying to get stuck into doing that. How did you manage that transition to take it from being owner operated to now then dealing with people in your team? What were some things that you did?
Well, the truth is I have had to get involved, which is probably the bit of work I did. I tried to recruit someone to help us, and the fact is it didn't work out. So it put me in a bit of a sticky situation. So I have. However, when you say go and see them, one thing we've managed to do is transition the clients enough not to have to go and see them in person. They're happy for us to do it remotely. We've kind of explained the way we work. And actually with technology the way it is, it doesn't really cause a problem. So there's been a couple of them. I've had no problems. And most of them I am talking to, but we're trying to align it to sort of when we're doing the year ends and things like that. So we're aligning it. But also though, the teams building their own relationship, because that's kind of one of the things, we give them more autonomy to the staff. So we did transfer over a couple of staff members, and obviously we had our own staff. And, there are areas of it that I don't get involved with. For instance, we have a payroll manager, so I've never been involved in any of the payroll discussions. She manages all of the payroll. As we're upselling, sort of upskilling the companies and getting them onto QuickBooks, I don't do any of the bookkeeper or anything like that. The only thing I've kind of done is help maintain the transfer and that relationship and sort of explaining how we work. But, if they need additional consultancy and things, they are going then to our CFO. So I'm not managing all of it, but I suppose it has been quite a lot of work for me.
Yeah.
Because I tried to recruit someone and it didn't work out for that particular one. So.
Sure. And what are you finding when it comes to valuation multiples? What are you finding is a good price for an accounting firm? Are you still seeing its multiples of gross recurring fees? 1 times, 1.2 times, or are you finding more and more asking for a multiple of EBITDA? What are you seeing?
No, the multiples of EBITDA only tends to happen if the profits above 1.5 mil. If it's lower than that, normally it's a multiple of revenue. Industry average is somewhere between 0.75 and 1.5 times recurring revenue. I think it depends what you're going for, because it's also the funding. The fact is, if you don't have the funding in place, it's hard to get a look in for businesses over 1 mil. They're more sought after. And to be honest, bigger players are going for those bigger deals. So unless you can, you kind of get laughed out the room a little bit, because you go and speak to them, they're like, have you got the funding? You say no. You're probably never going to get a look in. So it's a bit of a chicken and egg. You've got to try and somehow get secure funding so that you can get in, if you want to go for bigger ones, I think, to get in, or that's my experience of those discussions. Obviously, it's easier on the smaller ones because they're not quite as established, and you can get a bit of a better deal sometimes on them, because if they're owner operated, you can look at how you pay it and the deferrals. But the fact is, I would be willing to pay a little bit more for one that was ran well, that had the client team, on the basis that I'm getting something that's a lot more streamlined. If it's not running independently, to be honest, I'd want to be paying less, because I know it's a lot more work and cost for me.
Yeah.
But that doesn't mean I wouldn't. That doesn't mean I wouldn't go for smaller ones. I mean, we are still going to look for some smaller ones, some bolt on, because at the end of the day, I just think we've got a lot to offer. And what I'm finding with sort of older practices, with like Tax Digital coming in, is they just don't want the hassle. Yeah. They want their they like their clients, and they want their clients to be looked after, and they know that. So I suppose more current firms are able to give the clients a little bit more, I suppose, in terms of transitioning onto systems, having more real-time information. And it's gone really well for us with the acquisition that we've done so far.
Fantastic. And were you able to kind of do some self-finance in terms of repaying the owner through the profits generated, or was there a big down payment? Typically, what kind of movements are there in that space at the moment that you're seeing?
Well, I would say, this is where it depends how bad you want it. I think if you're going to go for a pretty big company, a bigger company, you're going to be looking at a higher down payment. I got a pretty good deal on mine because it was quite owner operating. There was a lot of work, and I had a good relationship with the sellers, and they were happy. We're happy with what we agreed. But I think when you're going for bigger ones, it's likely they're going to want at least 50% down payment, if not a bit more. Now the problem is, I think the problem will be if you do offer it. I'm not saying you won't get a lower deal, but you've got to think who else is in the running. If somebody else comes in and offers 60% and you're trying to only offer 20, you're probably not going to get it. So you've got to be able to offer them something different, because it's not all about the money. I think sometimes people do look for who you are and who you can service. Because like the one I bought, for instance, we were quite ethically the same, like the way they behaved and things like that. I liked it. I'm not saying, so it's also about who you connect with, I think. So I'm not saying you couldn't get it if you offered a lower amount, but the fact is you've got to be able to come to the table and explain why. And funding is a big part of it. So, and it depends who you're in the running against. Someone's offering 60 and you're offering 30. Why would they give it to you? Unless there's something you can really bring to the table from it.
Absolutely. So, yeah, there's definitely more buyers out there than sellers. So you've got to have an attractive proposition for anyone selling up. A couple of questions coming through for you, Julie. So what was the size of your firm when you acquired your first fee bank?
Around 300k turnover.
Okay, so you basically then doubled overnight through the acquisition.
Yeah, we haven't yet, because obviously we've only just bought it, but we'll see it will materialize in the next 12 months.
Yeah. And did you have kind of the standard clauses in there to say if any clients leave in the first 12 months, there's some clawback?
Yeah.
Cool. Okay, Rayan's asking, why do you prefer growth through acquisition rather than organic, I guess?
Because organic's hard work. Maybe not for everyone. I don't know. I mean, I did quite well in my organic, my LinkedIn and stuff. I don't pay a lot for marketing. I spent a lot of money building an organic strategy. I think it's hard work growing organic, constantly trying. And the fact is, depends how big you want to grow. It's very difficult. Up to about 9 people is easier. Most people, if you want to get bigger than that, it's difficult to do it without an acquisition. There's too much risk. There's too much risk involved if you're trying to grow organically past sort of 500,000, I personally think. Because obviously you're relying on people, are people going to leave? Are you going to have the cash flow buy-in, and gives you a lot more opportunity for I suppose, ongoing cash.
Absolutely. I guess it all depends on your objectives, what you want to grow, what you want to build. Really, I know you've got quite ambitious plans, haven't you, Julie? So what is your big plan? What do you want to kind of grow to? And I guess that is the reason why you are trying to grow in the fastest way possible, and presumably reinvesting all profits into into more and more acquisitions to scale.
Yeah, well, my ultimate aim is basically me become, I suppose, a silent investor in my own company. I don't want to work in it. I'd probably say I'm 50% there. It'd be silly for me to sit here and say I don't do anything in the business. I don't think you can do that when you grow organically in this short period of time. But that's my growth. So we're currently going through a funding round at the minute to get our next bank of funding to do our next acquisitions. But I do quite a lot personally. So I invest in property. I have a network of acquirers. So I'm involved in quite a lot of discussions on acquisitions outside of Wilkinson's as well, just because of what I do and who I know. I am actually launching my own PR now. So I've obviously got my podcast, and I'm moving into professional speaking, and I will be doing some masterclasses soon on sort of acquisitions and P&Ls and balance sheets and things. So yeah, I've got a lot going on personally for myself. So I love Wilkinson's. It will carry on growing. Will I be running it all? Probably not forever, because that's not my ambition. Is it runs on its own. I don't really believe, because this is how, I mean, we help people exit. You can't fully exit at maximum value if as the owner you still do a lot of the work. The business has to run, has to become an asset, because a buyer doesn't want to buy a job. They want to buy an asset. Definitely. Now, the fact is, you might have to buy a job to transform it into an asset, and that's fine. You know, some you might choose to take, like we did. We've chosen to take on one that's hard work. We were testing the waters. So you've got to make decisions on what you want. But
absolutely. So what is the number? I think you mentioned 5 million to me at some point. Is that still the number you're going to get to before you decide to do your exit? And what's the time frame for that?
Well, between 3 to 5. I haven't really decided. I think realistically, if we do another 3 acquisitions in the next 12 to 18 months, we could easily get to over 3 mil turnover. I've then got to decide when I want to exit. I don't know. I mean, you've got to remember, when you're getting loans to buy these businesses, I suppose theoretically in the early stages, it's not worth quite as much, because you still got the deferred consideration, the risk. But then you decide what payout you're willing to take at the end of the day. You know, if I could stay on for 3 more years and work in it and then get it full, or I could choose to exit earlier and just take a longer payout on the basis that someone might say, well, I don't want to pay you all until I know, you know, these actually do transition and your strategies come off. I have to make that. I would have to make that decision myself. So.
Brilliant. A couple of questions. How long did it take you to grow to 300K before your first acquisition? I guess that was probably only 2 years, was it?
Yeah, year 2 was at 300K. Yeah.
Okay. And that was just through your existing network, mainly through your consultancy, FD type consultancy, was it?
Yeah, that was just all through our organic growth clients. Yeah.
Fantastic. And one from Christian: are you an accountant by qualification, or was your experience in M&A helped you to be where you are now? So you're a SEMA accountant, aren't you? You said. Yeah,
I'm chartered management accountant. Yeah, I've been chartered for over 10 years. And then obviously my experience in M&A helped. Like I said, I didn't work in M&A specifically in corporate. I got involved in I wasn't ever involved in an actual acquisition in my corporate world, but I did obviously go into some of the ones they'd bought into the SME companies and integrate it into the group. But I think just my background generally commercially gave me a massive, because I've basically worked in every role there is in finance in different corporate companies. I've worked with every part of the supply chain, every director in a company. I've worked in companies that get cash flows and equity-backed funders, board packs, presentations. So I suppose I had a whole background I'd done system implementations. And when I speak to people in practice, so I suppose I wasn't really siloed to practice. So some people that work in practice might leave and steal a load of clients or whatever and then set up their own practice, but maybe they're a little bit siloed in the niche. I wasn't siloed in my niche because I'd obviously worked in every area, included, financial accounts. So although I may not have worked with, the only experience I didn't have when I left was I hadn't worked with hundreds of small clients, producing tax returns. But I just went off and just did a upgraded course. So I just did a tax comp and financial statement refresher. I did have a 15-module refresher just to remind myself, because obviously I'd studied some of it in, because let's face it, filling out the tax returns easy anyway.
Absolutely.
Yeah.
Yeah, definitely. Fantastic. No, that's been very, very helpful. I'm sure the audience have got lots of value from it, from hearing about Julie's journey in terms of how she's got to where she's got to in such a short space of time. Unfortunately, we'll run out of time. Hopefully, if you're listening to this on replay, put your questions and comments into the below section, tag Julie, and if she's got a chance and has some time, then hopefully she'll come back to you. But as Julie said, the value lies in us helping clients in the real time. Tax returns and accounts, as you said, they're simple. They're not really valuable to clients. And as the reason why Julie's been so successful is she's gone in right at the top where the real value lies, providing that virtual CFO FD type input, found her niche in terms of doing the M&A activity, getting the businesses ready for sale and helping them afterwards. So lots of learnings from that. Thank you very much, Julie, for spending the time with me today and sharing your journey and experiences. It's much appreciated. And if for those of you listening, hope you got value from it. If you want to catch up on the previous episodes of Accountants Live, go and check out my podcast, Profitable Accountant Podcast. Otherwise, take care, and I'll speak to you very soon. Bye for now.